Please set your long entry above the box, stop below the box, target 1:2. Easy. Set your entry, stop below the box, target 1:2. Easy. Alright, let's see some more. Today in this video, I'm gonna teach you a simple trading strategy which you can use on any time frame and any market asset, gold, forex, crypto, stocks, whatever you trade. And it is the most easy trading strategy. You don't need any kind of daily bias or market structure or supply demand, any kind of knowledge. It is simple strategy. Any beginner can copy this, and you can literally make easily profits if you follow this strategy. It is super simple and easy to understand, not complicated. So first of all, if you are new to my channel, let me introduce myself. My name is Harsh, and I'm a trader since last 5 years. So you can trust me whatever I say, and you can backtest the strategy and check yourself the accuracy is it. So before understanding the strategy, let's first understand how market moves and how market works. So market moves in cycles, right? Like price goes into sideways, then expansion, then price goes again sideways, then expansion. The expansion can come either upside or the downside. Our job is to identify the expansion and to trade that expansion. So this strategy is based on the simple market cycle concepts, nothing complicated. Alright, so let's first understand the strategy in the theory, then I will show you in the charts with practical examples, so you will get the clarity. Alright, so the strategy name is two box strategy. We have box 1, we have box 2. So market moves in cycles in stage 1 and stage 2. The stage 1 cycle is the sideways phase, the consolidation phase, where price generate liquidity and where amateurs and novice traders get trapped. And the stage 2 is expansion stage, in which market started to rally, right? And money made in the rally, not in the sideways. Alright, so here we have stage 1, market structure is sideways, price is literally sideways. So it is the phase where trader lost their patience and take back and forth trades and lost money. So this stage is sideways phase, the consolidation phase, and stage 2 is expansion phase. Our strategy works on stage 2. We are going to take trades on the stage 2, not on stage 1. So this is the bullish example. Price is sideways, so we will do nothing, and then when stage 2 begins to happen, we will place our entries. So it is the bearish example. Price is sideways, we will do nothing, we will wait for simply stage 2 to happen, and when stage 2 begins to happen, we will place our trades and we will capture the move. Alright, so this is the simple strategy. It is based on Wyckoff. If you don't know Wyckoff, then Richard Wyckoff invented this 100 years ago, and it still works because human emotions never changes. So let's summarize this strategy. Last time, when price consolidate in a stage 1, we will simply wait for the expansion of stage 2, and when the expansion begins to happen, we are going to place our trades. You can use this strategy on any time frame. I personally suggest you to use either 1 hour or 4 hour time frame. Why? Because institutions trade on the higher time frame, and higher time frame works better. Higher time frame equal to higher probability. Alright, so let's see some examples on the chart, so you will get the absolutely clarity. So one more thing I want you to add is add the 50 EMA on your chart, because 50 EMA shows you the average of last 50 candles, and it will give you signal. So for example, if the market is on stage 1 and when price begins to expand, so the 50 EMA will start to rise, so it will show you the stage 2 is happening and you can set your trades. Alright, so here we have our example number 1. Here price into stage 1, right? This is the stage 1. Now some people will ask how to mark the stage 1. It is simple. You don't need accurate lows and highs and top and all of that nonsense. Just simply you can easily see with your eyes that market is sideways. All right, it is easily visible to your eyes. Just simply place the box and you can clearly define that it is the stage 1. You don't need to take any trade in this. This is the sideways phase and here is the expansion phase, right? The easy identifying of expansion phase is these big candles, big imbalances candles to the one side. So what happened here, price was into stage 1 and then expansion began to happen, right? So two things you need to verify the expansion. First of all, price start to break the box either side. So here price broke the box to the downside and you can identify that it is the expansion phase. You can simply short. Once this candle placed, simply set your order, stop above here and you can easily target 1:2. All right, so stage 1 and stage 2. So this was our stage 2. This is the expansion phase. This is we need to make money. You cannot make money without the trend. So this is the trend following strategy, not reversals. All right, we are with higher time frame trend. That's why it is very accurate. So let's see some more examples. So here is the another example. Here 50 EMA is showing you that trend is up, 1 hour showing you trend is up. You have your stage 1, right? This is the literally stage 1. You can clearly see back and forth chop and then you can see price start to expand, right? This is the expansion phase. What is the identification? First of all, price start to break the box. Yes, gave body closing. Yes, big candles. Yes, simply set your long entry above the box, stop below the box, target 1:2. Easy. Let's see some more examples. So here we have again 50 EMA is rising. When 50 EMA is rising, simply you will look for buy. When 50 EMA is declining, simply you will look for sell. Easy guys, you don't need any kind of nonsense. Simply stage 1, right? Clearly we can see sideways, back and forth. The identification of stage 1 is simply back and forth. Then price start to rising. So simply this is the stage 1. Then what happened? The box start to break. The box start to break and then simply just set your entry, stop below the box, target 1:2. Easy. All right, let's see some more examples. I hope you are getting the clarity. It is simple strategy. You don't need to use any kind of logics and variables. Don't add anything into this. Simply you need 3 things: your stages and your moving average. Let's see some more example guys. Here we have what? The moving average is flat. Flat moving average indicates stage 1. This is the stage 1. Alright, simply this is stage 1. What happened? Price broke the box. Set your long entry, stop below the box, simply target 1:2. Alright, easy strategy. The trading, you can make your trading very simple. Alright, let me show you last example. After that, I want you to test this strategy on your system, back test it, forward test it, and take trades, journal it, and you will see the accuracy. We are using 1 hour time frame in this case. You can use any pair like Forex, gold, stocks, but I personally suggest pick a trending pair like Nasdaq, gold, because in the end you need expansion, and most of the time Forex pair are sideways, right? If you are doing Forex, then try to trade GBP USD, not Euro USD. Alright, so this is what happened. Price is totally sideways, right? Then what happened? Price was sideways, goes to the downside, and you can take the short trade, stop. In this case, stop hit. Not all trades will going to work, right? Then again what happened? price went into sideways phase, broke the box. Simply moving average is rising, you place your trade, stop below the box, target 1:2. Whenever you are winning, you are making 2R. Whenever you are losing, you are losing -1. This is your edge. Overall, with the 50% win rate, you can also make money in this. However, this strategy win rate is very high, like 70 to 80%. Alright, so I hope you understand this strategy. It was very simple. So let's summarize the strategy. We have market cycles, market run in cycles, consolidation to expansion, again consolidation to expansion. This is how market moves. Alright, so this work on the both side, bullish and bearish. It does not like, so it works on both side. So this is the stage 1, this is stage 2. When 50 moving average is flat, this will indicate this is the stage 1. When 50 EMAs start to rising, this is the stage 2. Alright, simply we will capture these trades when price happen on the stage 2. Now this is the 4-hour chart. If you are using 4-hour chart, you will get the less information on the chart and it will make it more clear, right? So this is the 4-hour chart, this is the stage 1. What happened here? Price is below the 50 EMA, then price broke the box, you took the trade, you place a stop, target 1:2. So 4-hour is better than 1 hour, but if you want more trades, then you can use 1 hour. If you want less trades, then you can use 4-hour. Alright, so that's it for today, guys. If you like the video, subscribe the channel and leave a comment, and it motivates me to make more videos. Thank you for the watching.